Hello and welcome back to Building a Better Britain. My name's Umar Hanif and I have got three key points I want to very quickly discuss on this episode. I get asked on a weekly basis if the Prime Minister can do three things right here, right now to attract business and increase significant flows of capital into the country, what would it be? And I always get asked by foreign investors looking to invest in this country, why is the United Kingdom so bureaucratic? So in response to that, I would say, looking at the regulatory things, so your tax, your legal frameworks, your planning in particular. Planning's a big one. And I think that in line with planning, the planning system that is, we should look at expedited planning for key areas, so like technology, renewable energy, innovation. Where we're meeting a market failure, there should be expedited planning where from submission to decision could be, say, 4 weeks, for example. And that's something that the government can do quite easily, relatively speaking. What we could do is look at establishing regional funds as well to target large sovereign wealth and pension fund money from across the world. To potentially provide seed funding or de-risking projects in certain parts of the country. And that could be to tackle, again, market failures like housing, for example. You know, we hear time and time again that the government wants to build millions of houses in the next 5 years, which is clearly never going to happen unless they start to think more innovatively. And this could be a way that we look to do that. So you're aligning certain regions with certain market failures. Therefore, there's funds available to try and tackle that. So you might have sovereign wealth in the Middle East that wants to invest in renewable energy, and then renewable energy investment hub might be the northeast of England. So you'd link them together. And what that prevents is Manchester competing with Liverpool, competing with Leeds, competing with Newcastle. Instead of competing cities, you've got regional growth hubs that will target investment based on companies and funds on their own merit and based on market failures within their own areas. And on that as well, the third thing would be we need to look at what a free trade agreement actually is in line with investment hubs in terms of, we know that India, for example, is very, and India and China are very high on tech, for example. And we've got, so Middlesbrough, for example, in the northeast of England has just been voted outside London the best tech startup town anywhere in Europe. So things like aligning Indian and Chinese investment with a place like Middlesbrough and Teesside, or you're looking at things like film studios and all of the amazing work that Manchester have done and are doing in Salford and that sort of area with US money and so on and so forth. So it's similar to the second point, but this is more around removing some of the barriers as well as making some of the funds available. So in summary, I would say we look at the reforms around planning in particular. We look at how we can attract foreign money by de-risking or providing seed funding for certain categories of investment. And then the third thing is around making meaningful free trade agreements, not just free trade agreements for the sake of it, but actually looking at the economic impact it's going to have in levelling the country up in its truest form. Thank you.